I don't forget to do it. Okay, well, it is 12 o'clock, so we'll go ahead and get started. I'm going to share my screen with you and show you a couple things in Brightspace real quick. Make sure I've got it pulled up. Yeah. So, okay, so here is our course in Brightspace. And I wanted to show you, number one, last night I posted exam 2 test review. So here is the test review for exam 2. And you see there are 20 multiple choice and 2 problems. We are going to go over test review together on Monday, but if you would like to go ahead and get started on your study guide, exam 2 test review is in there and open for you. So I wanted to show you guys that first. And then for today, we are going to get some more practice with the journal entries. So the problems, and I've mentioned this a couple times in class together, the problems for the second exam, there's one problem where we have to do 5 or 6 periodic inventory journal entries. And there's the second problem where we have to do 5 or 6 perpetual journal entries. So we're going to get some practice with those today. So under chapter 9, this is our chapter 9 content folder. Toward the bottom, it says periodic and perpetual journal entry review. And again, these are problems from chapter 9. That's where we got or started to get practice with these journal entries. So let me download this. And then we're going to work through these together. So let me stop sharing my Brightspace screen and get the Word document pulled up here. All right, and I'll try to blow this up as much as possible for us. Okay, so this was problem 9.3a. So hopefully this looks familiar to you. It is one that we worked on in class together. I think we might have done 9.3b, but nonetheless, same type of problem. So it says, Shirley's Beauty Store records sales and purchase transactions in the general journal. In addition to a general ledger, Shirley's Beauty Store also uses an accounts receivable ledger and accounts payable ledger. That's fine. Transactions for January related to sales and purchase of merchandise are as follows. So again, we're going to do the journal entries because those are our problems on the test, and that's what we want to get practice with. So January 3rd, we bought 30 mango bath and shower gels from Madden Inc. for $660. Invoice 3487, dated January 1, terms 2/10/N/30. FOB shipping point, freight was prepaid and added to the invoice. $125.40. So the total invoice that we owe, $785.43. Okay, so on this one, we are going to debit purchases. You know what? It's being funky and it's not letting me tab. So that's okay. I am going to write this. Okay, so let me get my drawer pulled up here. Okay, so we're going to debit purchases. Because again, this is the periodic system, right? So we're going to debit purchases. for $6.60. We're going to debit freight in for the amount of the freight cost, $125.43, and we're going to credit accounts payable for the entire amount that we owe, $785.43 is what that first one would look like. Okay, the next one, and remember too, and I'll highlight this real quick. I'm going to highlight it in green since it's St. Patty's Day. FOB shipping point. Remember that FOB shipping point, the buyer pays shipping. So FOB shipping point, the buyer pays the shipping cost. FOB destination, which is what we're going to see on the next one, the seller pays. Seller pays shipping. That's weird how it just did that, but anyway, that's okay. All right, so on January the 4th, it says we bought 10 beauty candle. Are we okay? Does someone have a question? Okay. January the 4th, we bought 10 beauty candle travel sets from Calhoun Candles Inc. for $420. Invoice dated 4513, invoice number 4513, dated January 1. Terms net 45, FOB destination. Again, FOB destination, the seller pays the shipping cost, so we don't have any freight in this example. So for this one, we're just going to debit purchases for $420, credit accounts payable for $420 is what that one would look like. Okay. This next one, January 12th, we sold 4 mango bath and shower gels on account to R. Keelman. Sales slip number 1456 for $120, plus sales tax of $9.60. So the total is $129.60. Okay, so on account, so we're going to debit accounts receivable for this Keelman for $129.60. We're going to credit sales revenue for $120. And then we're going to credit sales tax payable. Because remember, we collect those sales tax from the customer, but we don't get to keep those, that $9.60. We have to turn around and pay that to the Department of Revenue, right? And this represents, and I just did the math on my calculator just to make sure before I said it. This represents an 8% sales tax. So if it was asking us, for example, to calculate the sales tax, if we take 120 times, why is it doing that to me? Oh, come on. Let me write it over here. If we take 120 times 8%, that's where we get the $9.60 sales tax. So that represents a sales tax of 8%. Looking okay? All right, let's look at the next one then. So on the 13th, it says we received a credit memo number 8715 from Calhoun Candles for merchandise returned of 84. So if we go back, that Calhoun Candles was here on the 4th. That was this transaction. So when we initially purchased the candles, we credited AP, we owed $420. Now we're returning some of them, so we need to do the opposite. We need to debit accounts payable. For 84. Credit purchase returns and allowances. Purchase returns and allowances. 84 is what that one would look like. Okay, this next one, it says we bought 5 winter skin essential kits from Whitney and Waters for $197.50. Invoice number A875 dated January 18th, terms 2/15 N/45. FOB destination. So again, FOB destination, the seller pays shipping. So we don't have any. Why does it keep doing that to me? It's really aggravating me. The seller pays the shipping cost, so we don't have any. Oh my goodness. So we don't have any shipping cost in this case. So we're purchasing, what is our purchase? $197.50. So we're debiting purchases. 19750, crediting accounts payable. 19750 is what that one would look like. Okay, let's look at our next one here. Sold 3 winter skin essentials on account to A Benner. Sales slip number 1457 for $135.75 plus sales tax of $10.86 for a total of $146.61. Okay, so we need to debit accounts receivable for this Benner. Benner now owes us what, 146.61. We need to credit sales revenue for the ticket price or the purchase price of the winter skin essentials for 135.75. And then we need to credit sales tax payable. Sales tax payable for $10.86. All right, so I think, and I haven't plugged the numbers into my calculator to make sure, but I think that this represents sales tax of 8%. The way that we can double check that is if we take $10.86 divided by 135.75. 10.86 divided by 135.75. Yeah, that's 8%. So on our calculator, it shows 0.08, which we know is 8% sales tax. And the reason why I point that out to you is because there's a few multiple choice questions where we have to calculate the sales tax. The amount is just, it's not given to us. Like in this case, the $10.86, it's not just given to us. We have to calculate it. So if we take our 135.75 times 8%, that would tell us, again, we have sales tax of $10.86. So that's why I've pointed that out a couple times to you. But anyway, hopefully looking okay. Why it keeps doing that to me. It's aggravating me. Something with the formatting of this document. But anyway, okay. The last one here for the periodic inventory system, issued credit memo number 33 to A Benner For merchandise returned, $45.25 plus $3.62 sales tax. The total $48.87. So now this A binner, which on the 25th, right? We just sold this stuff to this person on the 25th. Now they're returning some of it. So we need to debit sales returns and allowances. For the amount being returned, $45.25. We need to debit sales tax payable. For the associated sales tax, $3.62. Credit accounts receivable. So that credit to accounts receivable for binner is going to reduce what they owe us by $48 and hot dog. $48.87 is what that one would look like. Okay, real quick before we get off of here, which let me zoom out of this. Any questions about any of these transactions that we did together so far? Okay, what I want to show you real quick is an example of a payment, which is what we've been doing in chapter 10, because on your problems, you know, again, problem number 1, you have to do 5 or 6 journal entries that are periodic inventory systems, just like we did here. And within those 5 or 6 transactions, you've got some that are payment transactions. So let's go back. Let's look at this January 3rd. And I'm trying to think of the best way to do this. Yeah, it's gonna, Okay, well, maybe I'll do this. I'll copy that. Okay. Let me just copy this one. I'll copy them like this, and maybe that'll keep it from being all funky formatted. Okay, so let's say on this first one, right? So this first one, we bought 30 mango bath and shower gels from Madden Inc. For $660. Invoice dated January 1, terms 2/10 N/30. So when we record the payment, right? So remember, when we record the payment, we do not take the discount on the shipping. Let me blow this back up for us. We do not take the discount on the shipping. So we're only taking the discount on the 660. So let's say, and I know that this wasn't part of one of our transactions, but just to get some practice with it, let's say that we did pay this invoice within the discount period. That means that we're not going to pay the entire 660, because we get a 2% discount, right? There's our terms, 2/10. So 2% off if paid within 10 days. So we're only going to pay 98% of the invoice. So if we use our calculators, we take 660 times 0.98, then we're only going to have to pay $646.80 plus the shipping, right? Plus that shipping, $125.43. So plus 125.43. So the total amount, instead of $785.43, the total we'll have to pay after our discount, $772.20. 23. And so when we pay this, we're going to have a debit to accounts payable for the entire amount we owed, $785.43. We're going to have a credit to cash for the amount of cash we need to pay, $772.23. And then we're going to have a credit to purchase discount. This was a purchase that we made, and we got that 2% discount. The difference between 785.43 minus 772.23, $13.20. So that's what the journal entry would look like to record payment. And again, this wasn't technically one of the journal entries they were asking us to do on this problem, but we do have to be able to do this journal entry for our problem on the test. So are we good with that? Okay. So the solution manuals are opened up in Brightspace for chapter 9, chapter 10, actually for every chapter at this point. So when you're going through and you're getting practice with these, you know, you could practice some of your problems in the book and then double check the solution manuals, right? Make sure you're on the right track with them. Okay. Let's do some periodic then. So, perpetual. So now we're on problem 9 4A. Again, our second problem on the test, we have to do some of these perpetual journal entries, 5 or 6 perpetual journal entries, right? So let's get some practice with these. So it says the following transactions relate to Hawkins Inc., an office store wholesaler during June of this year. Terms of sale are 2/10/30. The company is located in Los Angeles, California. Okay, well, we don't really care so much about that. I don't know why it's taken that down. It's whatever. Okay. So this first one, June 1, it says that we sold merchandise on account to Henrik's office store. Invoice number 1001 for $451.20. The cost of the merchandise was $397.06. So remember, with the perpetual inventory system, we have 2 journal entries when we have a sale. We have the journal entry to record the sale and the journal entry to record the cost of goods sold. So we've got 2 journal entries, right? So to record the sale, hold on. We don't want to use the highlighter to do this. Get my drawer pulled back up. So we want to debit accounts receivable to this Henrik's for $451.20, credit sales revenue $451.20. So that's the entry to record the sale. And then we also want to record the cost of goods sold. So we debit cost of goods sold $397.06. We credit merchandise inventory. $397.06. So the problem on the test, hopefully it's going to help you remember, because when it gives you the transactions for the periodic system, it doesn't give you the cost of merchandise sold, right? When it gives you the transactions for the perpetual system, just like you see here, it gives us that cost of merchandise sold. So hopefully that helps us remember that we have to record both, right? We have to record the sale, which is our first journal entry here, and then we have to record the cost of goods sold, which is our second entry there. All right, let's look at this next one. Bought merchandise on account from Kruger Inc., invoice 845A for $485.15. Terms 1/10/30, dated June 1. FOB San Diego. So that's FOB shipping point, right? The shipping point is San Diego. Freight prepaid and added to the invoice, $15. So the total amount owed, $515. Okay, so with periodic, we use the freight in account. We do not use that for perpetual. For perpetual, freight is just added to the cost of the inventory. So we debit merchandise inventory. $515, credit accounts payable. $500.15. So, again, we do not, with perpetual, we do not use the purchases account. We do not use freight in. We use merchandise inventory instead. So, okay, what is this next one? On the 10th, we sold merchandise on account to Ballard Stores, invoice number 1002 for $2,483.65. The cost of the merchandise was $2,235.29. Again, hopefully on the exam, it's going to help us remember, because it tells us on the perpetual inventory entries, it tells us the cost of the merchandise, right? So hopefully that helps us remember that, in fact, we have to record the cost. So 2 journal entries, a journal entry to record the sale, a journal entry to record the cost. So to record the sale, we debit accounts receivable to this Ballard, 2483.65. We credit sales revenue, 2483.65, right? That's the entry to record the sale. And then to record the cost of merchandise, we debit cost of goods sold. I hear our puppy in there crying. Let's see, debit cost of goods sold, credit merchandise inventory. 2235.29. Hold on one second, guys. Chloe, what is he crying about? Good grief. So yeah, perpetual inventory. We have to record the sale and then record the cost of goods sold. Okay, this next one, on the 13th, we bought merchandise on account from Kennedy Inc., invoice number 4833 for $2,450.13. Terms 2/10/30, dated June 11th. FOB San Francisco. So again, this means FOB shipping point. The shipping point is San Francisco. Freight prepaid and added to the invoice, 123. So the total is $2,573.13. So again, we do not use purchases. We do not use freight in. Perpetual inventory, we use merchandise inventory. So we're going to debit merchandise inventory, 2573.13, credit accounts payable for this Kennedy. Now we owe them $2,573.13. Okay, and real quick while we're on this one, again, just like I did on the previous problem, I just want to show you, okay, let's assume that we pay this within the discount period, right? So let me get my red out. So to record payment. Remember, we don't get the discount off of the freight. We get the discount off of the original invoice. So we don't have, here's our original invoice amount, right? So we don't have to pay 100% of $2,415.13 because we're going to pay within the discount period. We only have to pay 98% of that. So on my calculator, I'm going to take 2450.13 times 0.98. So we need to pay 2401.13 if we round up, plus the freight. So 2401.13 plus the freight of 123. To pay off this invoice, we're going to end up paying $2,524.13, right? Is what we would pay, the amount that we would have to spend in cash to pay this off. And so when we do that, we're going to debit accounts payable for what? 2573.13. We're going to credit cash for the amount of cash that we are paying, 2524. Oh, hot dog. 2524. Oh, ragga, 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 ragga. 25. You know what? It's like not letting me write in the margin. Stupid thing. Let me move it over. 2524.13. And then we're going to credit the discount. We don't use purchase discount with merchandise inventory. So we'll just say cash discount. Where is it? How much is it? It is the difference between 2573.13 minus 2524.13. $49 is that discount amount. All right, so again, just to show you an example of recording the payment, because we have to do that in our problem. Okay, this next one, sold merchandise on account to Lawson Office Store off invoice number 1003 for $754.99. The cost of the merchandise was $671.94. Okay, again, one entry to record the sale, one entry to record the cost of goods sold. So debit accounts receivable for $754.99. I don't know why my thing is being funky now. Credit sales revenue. 754.99. And then to record the cost, we debit cost of goods sold, $671.94. Credit merchandise inventory, $671.94. Is what that one would look like. Okay, now we've got one of our customers returning. Actually, the customer we just did now is returning part of the merchandise. So it says issued credit memo number 33 to Lawson Office Store for merchandise returned of 103.25. The cost of the merchandise was 91.89. So we're reversing the cost of goods sold entry. And then we have to obviously credit accounts receivable to reduce what they owe. So this one is debit sales returns and allowances. Uh, 103.25 credit accounts receivable 103.25. And then we have to basically flip-flop this entry, right? So we're putting this merchandise back into our inventory. Inventory is an asset. It increases with a debit, right? So we're debiting merchandise inventory 91.89, crediting cost of goods sold because they returned it, so we in fact did not sell it, right? So it's just a reverse of that entry on the 18th. Okay, couple more of these. The next one on the 25th, it says we bought merchandise on account from Villarreal Inc. Invoice number 4R32 for $1,552.30. Freight prepaid and added to the invoice $84. Okay, so we're debiting merchandise inventory. $1,636.30, crediting accounts payable to this Villarreal. Now we owe them $1,636.30. Okay. Lastly, we're returning some stuff to Villarreal. So we bought that merchandise back here from Villarreal, right? There's that Villarreal. Now we're returning some. So it says, received credit memo number 44 for merchandise returned to Villarreal Inc. for $224.50. So we just need to reverse this. We just need to flip-flop this. So we're going to debit accounts payable $224.50. That's going to reduce the accounts payable account, reduce how much we owe them. Credit merchandise inventory. We do not use purchase returns and allowances with the Perpetual system. We just reduce inventory when we return something. So all right, how we doing with these guys? Hopefully that helped us. Again, these are two problems out of your book. This was problem 9.4a and problem 9.3a that we just did. So good practice for you guys to work through for the exam problems. Okay. I'm going to stop sharing my screen with you. Any questions about any of those so far? Okay. Well, I have been recording this, guys, so I am going to send out the recording or the link to the recording for everybody. So while you're studying for the exam, if you want to go back and watch it again, you'll have that option. And I showed you guys where, and here I'll do it one more time here. Well, 1 second. Let me show you one more time in Brightspace that I posted test review, because there's a lot more people on the meeting now than when we started. So let me just point this out to you again. If we go into Brightspace under syllabus and other important information, here is exam 2 test review. So we just went through our 2 problems, right? Problem number 1, prepare journal entries using the periodic system. Problem number 2, prepare journal entries using perpetual inventory system. We just went through the problem. But again, excuse me. But again, I wanted to just point out to you guys that exam 2 test review is in there. So if you want to go through and start getting your study guide together, it is in there and available for you, okay? All right, any questions? Okay, well, hopefully that was helpful to you guys, and you know where to find me in case you have any questions. Miss Ella, can I talk to you for 1 minute, please? The rest of you are free to go if you don't have any questions. Are you there, Ella? Oh no, she got off. Oh, you are there. Okay. I just saw a bunch of things deleting. So our appointment's at 5 o'clock today, right? I am gonna run, I don't know, this puppy was chewing on his rope and he like swallowed some of it and he's hacked up a few times. That's why I just stopped a second ago. I'm like, what is he crying about? So it's right up the street. The appointment's at 4 o'clock. I should be back by 5, but I was just letting you know I might be a few minutes late. If I am, I'm joining. So
That's totally fine. Would you rather reschedule for Monday?
Yeah, we can. If it's better, I want to get him into the vet before the weekend because if he's got some of that rope stuck in his throat, I just don't want it staying there all weekend.
Yeah, of course, that's completely fine.
Okay, let me see. But you got the long-term advising plan. Did you look at it yet?
No, could you re-email it to me? I can't find it in my email.
Yeah, I'll send it to you again because that I kind of like lined up every class that is left and how that would look for you. So yeah, let me resend that to you so you can look at that over the weekend. And then
Yep.
let me pull up the Google Doc right now so that we can see what we have here. So okay, hold on 1 second. Oh. Okay, let's see here. Okay, so on Monday, I still have, I mean, I can do 4, 4:30, 5, whatever's good for you.
Would you be able to say 5:30 or 6?
Yeah, that's okay. So I'm gonna put you down then for, do you think you can make it by 5:30?
Yeah, I just have turnout, but I should be able to have all the horses back in by 5:20. So
Okay, so I'm gonna put you down for Monday, 5:30 p.m. So that's Monday the 20th, okay? And I'll send you that Excel file so you can take a look at it over the weekend and kind of, because I just listed like everything you still needed to take and how it'll break down for you. So
perfect. Thank you so
sound
much.
good?
Yeah.
All right. Have a good rest of your day. Happy St. Patrick's Day.
Thank you so much.
Bye-bye.